The S&P 500 went to new all-time highs this week. Seems like the market's really strong, but this chart, this index, the S&P 500, is a bit of a lie, and I'll explain how in this week's Market Minutes video. Plus, I'll do my regular market analysis, and we'll look at the trade of the week. That's all coming up. So the S&P 500, it is what is referred to as a market-weighted index. And it means that the overall market could be very different from what the index shows. Stocks are really not as strong as they seem. You see, the S&P 500 hit a new all-time high this week, but because it's a market-weighted index, that move to all-time highs is really a representation of what the biggest companies in the index are doing. Here's how it works. If it is the largest company in the world, right now that's Microsoft. Well, Microsoft has a much bigger concentration in how the index is calculated. It has a much bigger influence on how that index looks. And as companies grow bigger, they have bigger influence. Well, this introduces a real bias to these market-weighted indexes because the strongest companies are the ones that are going up. They become the biggest companies because their value is appreciating since they're in an upward trend. And therefore, they have a heavier influence on the index itself. In other words, there's always going to be the leaders of the market taking a bigger portion of what that index looks like. Now, I'm going to show you a chart in just a moment. But the basic result is that an index of 500 stocks, the S&P 500, can really be heavily dominated by a few of the biggest companies. Now, here's a weighting as of right now. Microsoft, the biggest company in the world, it recently surpassed Apple, and then Nvidia, and so on and so forth. So if Microsoft goes up 1.5%, it's much more meaningful than another company on that index going up 4 or 5% even, because of its weighting in the index. So here is a chart of the S&P 500 on a weekly time frame, and you can see it's hitting new highs. Now just take a mental picture of this and how it's been trending higher here and how it recently went to new highs, okay? Now I'm going to show you another version of the S&P 500 that is called an equal weighted version. In other words, every company in the index has the same weight. Look at that. It's still gone up over the last couple of months, but really nothing like what the S&P 500 normal index has gone up. So SPY, which is the ETF that represents the normal S&P 500 index, has not done as well as the RSP, which is the market-weighted version of the index. And I think it's always going to be that the S&P 500 market-weighted index will outperform the equal weighted index, RSP, simply because the companies that are doing well become a greater concentration of the index because their market cap is increasing. You know, if your stock's in an upward trend, the market cap is increasing, and thus they take a bigger role in the index and they pull the index higher. These market-weighted index always have an upward bias to them. And so if you're looking to buy just one index exchange traded fund, you want to favor the one that is market weighted because the strongest companies will do the best. All right, let's take a look at here's the chart of Microsoft. You can see that it is the biggest company in the index and it has really outperformed the index itself. It's one of the forces pulling the market higher. All right, let's get into this week's market analysis now. Here is, again, that chart of the S&P 500, and you can see on the 3-year time frame it is in an upward trend, so this is a bullish market. It's just broken through to new highs. Momentum is up. That looks reasonably good. On the 1-month time frame, you can see we broke through this resistance on Friday. Market looking pretty good overall. But, and this is a big but, that's not what the overall market is doing. That's what the biggest companies in the overall market are doing. Let's take a look at the NASDAQ 100. Again, to new highs. bullish trend, everything looking great, short-term chart, much like the S&P 500. But this is because the market is being led higher by the large cap tech stocks, Microsoft, Amazon, those kinds of companies. If we go to the IWM, which is the Russell 2000 index, this is now a basket of 2,000 companies that are much smaller in size. And you can see that the smaller companies, as represented by IWM, are really not doing as well. Now, perhaps that means they have much more upside, but it also means that the driving force in the market right now is hurting most companies. What is the driving force? It is interest rates and the outlook for interest rates. I'm going to show you another chart in just a little bit that'll give you a sense of where interest rates are heading. But that is the weight on this much broader index of stocks. You can see that it actually slid lower the last 4 weeks. The market's had a slow start to the year in terms of the small cap stocks. If you look at the 1 month chart, you can see the trend is down. Even though the S&P 500 is moving up, most companies have been moving down, and that's over concerns about interest rates. And again, I'll show you another chart in a moment that'll give us some indication of where interest rates are likely headed. All right, well, let's take a look at the Canadian market, T.XIU. This market is more heavily dominated by commodities, so gold, silver, precious metals, mining in general, uranium, and then, of course, energy stocks. And then the other big sector in Canada is the banking sector. Well, breaking through these recent highs looks a little better than the Russell 2000, but still not keeping up with the S&P 500. We don't have the same dominance of large cap tech stocks in the Canadian market, and that's what has caused it to lag the S&P 500. But some strength in some commodities, particularly uranium, is helping the Canadian market sort of do better than the Russell 2000. A little bit of a surge on Friday should bring it up into this trading range next week, but not a real strong looking market right now. Let's take a look at gold and oil. So the trend in gold is up, but it's very choppy. See how it has a lot of volatility, doesn't really have a smooth trend. So it becomes a little bit difficult to predict, but nonetheless, the bottoms are still rising, so it's not a negative market. You can see here that choppiness, and in the short term, a little bit of a downward move, but over the last month, basically sideways. How about oil? USO is an oil chart. It's been stabilizing the last 2 months after a sell-off into the end of the year last year, building rising bottoms. I think oil starts to recover. I'd like to see that recovery begin on this chart, which is our intraday chart. Need to start breaking through these $71 level on the USO, and then oil should start to recover. And that could be an opportunity for a sector to lead the market. Often the sectors that lag the market in the recent past become the leaders of the future, and this may be one, but we do need to see a break through that $71 level. All right, let's take a look at currencies now. UUP is the US dollar, and let's just take a look at the 1 month chart. You can see over the last few weeks, the trend is rising. There's a reason for that. I'll explain in just a moment. But first, let's take a look at Bitcoin, which has been one of the hottest areas of the market. And then last week, of course, we had, or 2 weeks ago, we had the announcement that they could have ETFs for Bitcoin. And that was kind of the top in the short term. If we look at the 1 month chart, you can see that it went a little parabolic. When trends go parabolic, by that I mean a curve up and away, it's usually just before they pull back. It has pulled back, and it's pulled back to the upward trend line more or less. So it should bounce off of this. You can see on Friday it did, but does it continue, or do we make a falling top and break down, and then maybe the party's over on Bitcoin? It's close one way or the other, so keep an eye on that. Now the final chart we'll look at is the interest rate chart. TLT is the US bond market ETF. If this is going down, then interest rates are going up. You can see we had a little rise in the bond market into the end of the year. That's what gave us our Santa Claus rally in most stocks. But that's rolled over a little bit in the last 2 or 3 weeks. Really, in the month of January, the market started to be concerned that maybe interest rates won't be dropped as much as expected or hoped for in 2024. And that is the problem for the small cap stocks. That is the problem for most stocks in general. This chart resembles, if we look at the recent past, resembles more the chart of the IWM than the S&P 500 does. Remember the IWM chart had this trend down since the start of the year? Well, it's the same thing in the bond market. And that's what's driving most stocks, because most stocks are interest rate sensitive. But large cap tech stocks like Microsoft and such, they don't seem to have that same interest rate sensitivity. That's where the money's flowing, and that's lifting those indexes up, painting a picture like the stock market is great, when in fact most stocks are not participating in the strength. So what we need to see is for this downward trend in the bond market to reverse, to start to build some rising bottoms in the short term and move up. I don't see that yet. And that's one of the reasons why the US dollar has been going up. Because if this is going down, if the bond market is going down, that means interest rates are rising in the bond market. If interest rates are rising, it becomes more desirable to hold US bonds, which makes the demand for US dollars higher, which boosts the value of the US dollar. That all connects. All right, so let's take a look then at my ratings. Large cap, US large cap, and NASDAQ bullish on both time frames. Small cap stocks neutral. I do think we're starting to turn, and we could see a recovery in the small caps provided the bond market gives us a little stability. Canadian stocks bullish on both time frames, but barely so. It's just got a slight upward bias. Gold and oil neutral. US dollar bullish in the short term, neutral in the long term. Bitcoin short term neutral. I've been bullish on Bitcoin on both time frames for a very long time. So this is a bit of a change now. We're starting to see signs that Bitcoin may be topping out, but it hasn't broken the upward trends yet. And then bonds still bearish on both time frames. And that's really the thing that's hanging over the stock market. All right, now let's take a look at the trade of the week. It was a pretty quiet week in the market this past week. Not a lot going on. There was a few real big movers. This was one of them. This related to the win of Trump in the Iowa caucuses, I think they're called. I'm not much on politics, but it was a factor in this stock and another stock, PHUN, which had big moves this past week. And this is really emphasizes how I approach the market as a trader. If I'm day trading, I only want to trade stocks that have something going on. I want to trade stocks that are trading with abnormal volume. So here you can see this is the previous day, no abnormal volume, and then this day the volume lights up. All that means is that the stock's going viral, that people are jumping on that stock with a lot of enthusiasm. Then what I want to see is just simple patterns. So if I know the stock is trading abnormal volume, and we have algorithms that we run in active live on Stockscores every day, looking for the stocks that are abnormal, we can find them within a minute of them starting to behave abnormally. So when we see the abnormal action, it paints these pink and yellow dots on our charts. And then what I want to watch for, I love this pattern. The stock goes up, it pulls back, and it breaks the pullback. Stock goes up, it pulls back, and it breaks the pullback. And notice that there's a little yellow dot on that candle. That's a 1 minute candle. So that was our first clue, first good buying spot. Buy here, support was here, put your stop loss around there. Stock had a nice run through the day. It did it again here. It went up, it pulled back, and it broke the pullback with those pink and yellow dots. And then that made the next leg up. So these are the kind of things that we're running in our Stockscores Active Live and the tools that I provide through there. You can learn more about that at stockscores.com. But just keep it simple. Focus on stocks that are trading abnormally. Focus on stocks that have the crowd, that are going viral. And then try to buy strong stocks when they break weakness. That's a very simple formula that has served me well. Hope you've enjoyed this week's Stockscores Market Minutes. If so, please click on the like button. Subscribe to the channel. It's free. And you'll get these videos every week alerted to you when they are uploaded. Have a great week in the market and trade well.